Welcome to the Stock Market Morning Prep video for Thursday, July 10th. Well, the markets actually behaved quite well after the FOMC minutes that came out yesterday at 2 o'clock in the U.S. Janet Yellen's comments and the Fed members' comments, they said they would start tapering in October their bond buying asset purchase program. So at one point we dipped a little bit and then the markets reacted quite positively. Now it's very difficult to read the situation because it's one thing, interest rates are not good for stocks, but if they do raise, if they raise maybe a quarter of a point, I don't think that's going to be a big deal until they start getting really aggressive. So you might have the initial shock down and then the markets probably take that and absorb it as positive that the markets can stand on its own 2 feet. So that's going to be difficult to decipher, and we don't know that yet. But anyway, the markets did rally at the end of the day with a very, very slow day, and that's only because of waiting for the Fed to come. So now what happens is in the overnight we have some terrible European data that came out, and look what happens. The market now, there's a 5-minute ES chart. The market is down now 16 handles, and this is what I keep stressing about. Not being long or holding lots of long positions without a hedge. Now, if you're long many positions, you're going to get hurt this morning, and you're going to get hurt in a big way. The only thing is the market. If the market exhausts itself prior to the 9:30 open in the U.S., that's the problem, you see. So this is why I stay away from holding positions. If I hold a position, it'll be a spread, maybe a long position, small, where I'm not going to get hurt. But that's something that you do not want to do, and I've been strictly concentrating more on intraday trades, picking stocks that have bottom based or coming out of a base. And yeah, there's lack of activity. That's true. But as traders, we need to pick what's going to be the best probability on a trade. And holding overnight longs is not it right now. Now, the question is, what happens today? If the market recovers today and they buy the dip, because the mentality is buy the dip, buy the dip, buy the dip, and if that doesn't happen, to me, I think the market's may be putting in a local top. It's still early to tell, but when you have 2 down days, you have a small update with no conviction to the upside, and then the markets roll over this morning. Now, again, we're still early in the morning in the U.S., so the market has not opened. Still several hours before it opens. But you still have to wonder, maybe the markets are exhausted. And they are exhausted. There's no question about it. But what happens is we're having the algorithms come in and just keep bidding up stops, looking for offers. You're going to have that push higher, and then everybody else, momentum players, get in, and they start pushing the market higher as well. So this is a falsified move that we're up at these lofty levels here, okay? So you have to use caution. I know I sound like a broken record, and I know this is monotonous, but you have to use caution. And this is why the mutual fund holders, the holders of some sort of index, and they just keep buying and buying. There's no reason to add here if you're a long-term investor. Not at these levels. You will have a shot to add to your long position. I always say that if you can be patient enough, it will come back to you. Where that's where many traders, they buy, they rush, and they buy in. And yeah, the idea was right, but the entry was totally wrong. And that's what really hurts a trader and or investor for that matter. So just be careful. I mean, this is dangerous up here to be holding a bunch of longs. If you got some gains, lock them in and build your day. That's the way I like to do it. Now, yeah, again, it's slow because we're in the summer, and when it's a stock picker's market, you might not find something that you like, and by the time you look up at the clock, it's already days over and you didn't do anything. But you did do something. You research, you're looking for trade ideas, and then whatever doesn't happen, take your notes down for the day, and then you use it for the next day, okay? All right, so now let's get this out of the way. I want to show you some indicators, and first what I want to do is I want to bring in some things that I think may be telling us that we have a local top. Some of the European indices, such as the German DAX, which is the leader in the Europe market, has broken down into this trend line. This is yesterday. This morning they're getting hit really, really bad. And the DAX has broken this long-term uptrend line since early March here. That is, to me, the market is starting to roll over. You can see the top being in place. You can just see a horizontal trend line, and you can see that we've broken down here. So this is not good. MACD stochastics rolling over again. MACD has been on a sell signal since early June. So this, to me, is telling me that we may be putting in a top. Again, still early. I am not calling a top at this moment, but I'm just telling you this. Lot of the indices and some of the indicators are definitely saying so. Here's the VIX. The FTSE, the London Times, another major index in Europe, is now breaking down, and it's already at its 200-day moving average. MACD stochastics rolling over exactly what I'm saying the last time with the CAC. Okay. Let's take a look at some of the indicators now. Stocks above the 50-day moving average. Perfect area for a sell signal. Every time we rally up here or get exhausted to the top, we actually start to sell off. You can see, just look at these points. You'll see that we start to roll over again. So now we're back above the 50, and now stocks back above the 50-day moving average are at the 86th percentile, almost 90, actually 90. So this to me is another sign that markets are due for some sort of a pullback. New highs. Well, if the markets are making new highs, how come stocks aren't making new highs? That is telling us that's a false signal that the indexes are moving and stocks are not. You can take a look at this 52-week high-low, and we've dropped dramatically off of this. So this to me is pointing for another correction. And then we look at a couple of the breadth indicators. Advanced declining issues, bad. This is not a good sign, especially when you have markets moving up. Another warning sign. Now, again, we've had these warning signs for quite some time, but this is something that, at least if you look back here, we've had some big spikes as we came back up. But since May, we haven't gone anywhere, and the markets have gone higher. That is what the concern is. Having these big spikes up, at least telling me that advanced decline issues, we do have some advancing issues versus declining. Here, you don't have that here. So that's another issue that I'm worried about. And then we have, lastly, is the advanced decline with volume. Remember, do not discount volume. If you look at, listen to CNBC, and they have volume, it's the new norm. It's not the new norm. Yeah, there may be lesser volume, but you could still gauge volume from the last 3 years of the markets not being truly what it was back in 2006, 7, and 8, where we had a lot of volume. This is not a good sign here, okay? So this is something I'm just telling you, please be careful. All right, now let's go right into the index. We're going to follow up with that. We have the ES down 15.5 handles. We are now just breaking below the 21. And this is going to be an important day, guys, because if this market cannot hold or recoup this loss, or at least most of it, I think the markets are going to be in trouble. Now, right now, even though we're at down 16 handles, that's still okay because it's making a bull flag right now. But we can't lose this 20. If we lose this 20, we're going to take a beeline shot right to the 50-day moving average, and then we'd have to reevaluate. Okay, transports, again, holding up quite well here. This is the IYT, the transportation ETF, holding up well. But if the market goes, transports, I guarantee you, will move much lower as well. All right, and my first target will be the 34-day moving average, and then of course this lower area, this local low, is my next bigger target here. Okay. Diamonds, doing okay, just kind of drifting along higher here. We're above the 1272 extension. We're looking for the 1618. But, you know, the diamonds, Dow 30 stocks, it's just a boring index, but people like to watch it. So I just like to show the analysis. We are still making higher highs and higher lows, but remember, if the market goes, they're all going to go. All right, and the IWM, this is one of the leaders, broken down from the channel, cannot get back above it, and it is below the 20-day moving average, okay? This is one of the leaders below the 20, and it's stuck on the 34. So a word of caution, we have some market weakness, and the breadth of the market is telling us that we are looking for a sell-off. Lastly is the Qs holding up well, and again, way above the 20-day moving average. Some of the big cap tech is holding in quite nicely, so that's why you have this move here. So guys, just be careful, okay, because I don't get too complacent with this market, and don't let the pundits of CNBC and Fox Business News and all of these newscasters tell you. Stick to the trend, of course. Look for stocks that have been basing, and you know what's actually looking really good is some gold stocks are looking really good. Gold's up $19 right now. And that's also due for the help of Janet Yellen. We're looking to end the bond purchase program in October. That's going to help. That's going to help gold. So I like to look at some of the gold stocks. Maybe you want to look at some of them yourself. GG is one of them. AYU, or even the GLD. Real simple. Keep it simple. Let this ETF, the GLD, which I'll start working on some of the analysis tonight for tomorrow if gold continues to be well bid up. Okay. Have a great day. Use caution. Use your stops, and we'll speak to you tomorrow. Take care.